Hey guys, it's BTC Vix here. I just wanted to do a real quick tutorial on a topic matter that I've received a lot of questions from lately. It's the futures event settlement and how margin calls work on the socialized loss system that's currently on the three futures exchanges that most of us trade at. So I'll quickly go over when the settlement times are, the actual process of settlement, why should we care as traders, and then I'll just quickly merge into the margin call system, how it works and how it differs from a lot of people's perspective, and then again, why is it important to us as traders to be mindful of. And as always, you can find me and the other 100 traders in the TeamSpeak WhaleClub channel. I'll include the specifics to get to that server in the show notes. So as far as the times for settlement of the three futures platforms that are currently out there, I found this website off of the Coin Markets IRC. A guy constructed this that I use quite regularly so that you know exactly when those settlement event times will be. I'll include this website again in the show notes. So as far as the settlement process itself, I'm going to use OKCoin specifically because that's the platform I'm most knowledgeable about. It's, to my understanding, all exchanges now do settle on a weekly basis, even though there are some contracts that are longer duration than that. There's still a week-to-week settlement, and it's important to know that if it's a front week contract, it'll actually expire at that settlement, so you will have no position after it settles. Now the longer dated contracts, even though there's a writing of the books between the shorts and the longs, you actually still maintain a position. And the way they get away with that in OKCoin is they simply take your unrealized profit and loss and make it realized profit and loss. And on the fixed margin system, what they're doing is they're actually adding it right into the account balance. This is important because it was something I brought up in the Hangout, that if at settlement they were resetting all of those fixed margin mode contracts and realizing the profit into just the equity account, that now there would be somebody could know exactly where all the margin calls will be. So they went ahead and fixed this part of it. And the settlement process is just that. It's just going about writing the book at that specific strike date. And as we move down here, it's really important to know that how settlement is calculated and the conditions for it. So traditionally speaking, they would have it settled to an index price. And you can look up in the FAQ about the index that OKCoin has constructed. Generally, the price action for the front week should follow that. We definitely see times where it experiences either a premium or a discount. The longer dated futures have some time premium, so they tend to be more expensive than the front week. But what OKCoin has chosen to do is something a little bit more specific during the settlement period. So they actually have conditions that need to be met to go into the settlement process. Just quickly here, so it's the last half hour need to satisfy certain conditions. And here are the conditions. So once we go into settlement, then once we reach these conditions, we'll head into settlement. And as you can see, it does say that if these conditions aren't met, if it's a highly volatile situation, they'll be delayed by 15 minutes. So it says it'll just continually go 15 minutes until that criteria is met. And then there's the fail-safe here, that if it goes past 1800 China time, that they have a specific condition that they'll go about canceling settlement and resume trading as normal. I will admit that I'm not particularly sure how it's working out on BitVC or 796. Like I said, this is OKCoin specific. Now I want to take a look at why specifically the futures settlement event is important for traders like us. I've started with the BitVC futures and underlying. On the left here you have the futures at settlement that I've outlined with the white rectangle, and the same period in the underlying during that settlement process. So BitVC futures, when they settled, they actually opened up higher with the spike candle. During the same time, you've seen a rally in the underlying, and now we'll take a look at OKCoins. So for OKCoin futures, after the contract settled, there's actually a big sell-off, a big open lower, another corresponding sell-off in the underlying. So although I'm showing you the specific reaction in the spot trading to the futures market, I don't want to say that it's always going to happen in that manner, either up or down. But I will say that the reason why a futures settlement event is so important to us traders is it can be a period of a lot of market action. There's a lot of people getting in and out of positions, and it's a new pricing for the market. And I anticipate as futures become an ever larger part of trading and being watched, an event that's watched, it'll have more and more impact. So keep that in mind as you're trading, as you go forward in your trading of those times when future settlement happens, because there can be some pretty large moves in the market, and if you're not paying attention, you may miss opportunity or get caught with your pants down. So now I'm going to shift over to how the socialized margin call system works on all three of the platforms that you're going to trade futures on in the Bitcoin trading space. They have their little nuances as far as when they initiate those margin calls, but the premise of the socialized law system is the same. I've taken this example because this is a pretty recent one, where we had a massive sell-off. We see volume spike into here, spike as we enter the margin call zone. So unlike traditional markets where a margin call is executed via market order, where they just immediately sell your position off, the socialized system is a little bit different. They actually place a limit order, and although that may seem strange, the limit order just sits there. If it doesn't get filled during the period when the margin call is initiated, and then that settlement date that we're talking about, basically that's what's going to equate to your socialized loss. So in this specific example, we have margin calls trigger, then we actually had a decent bounce which probably filled all of those satisfied all those margin calls that were initiated. But had this continued down and not rebounded into this area, we might be looking at some situations of a socialized loss. And the socialized loss would simply be, say the margin call limit was put at 265, and for simplicity's sake, let's say the contract eventually settles at 260. It's the amount of bitcoins that were at the 265 versus the 260 level, minus that difference being $5. Now you have the amount of socialized loss that will go into that system. And OKCoin actually makes it pretty easy to know what's currently outstanding for those contracts. I'm just looking right now at the front week, and we have still one long margin call outstanding. Actually, this is kind of weird. I'm not sure. Oh yeah, it's probably 2 weeks. That's why. That still needs to be hit, otherwise this will be calculated into the socialized losses. And they make it pretty easy to understand how much the socialized losses are weighing down on the contract. The last week there was no socialized losses for settlement for Bitcoin, but Litecoin is a little bit of a different story. This is the current week, and as you can see, there's quite a bit. This isn't actually too bad compared to the last week of LTC, but this is something to take in consideration if you're playing the market. If you know there's a lot of socialized losses outstanding and you can see where they are, understand that if you're trading this future for the first time, and say you're like a day or two away from settlement, and you don't think many of these are going to get hit, your profits might be haircutted by 5, 10, or even 25%, which we've seen recently in LTC. And this is just the page that I was referencing to. If you go and click on the deliveries tab on OKCoin, you can see if they've had any socialized losses on the current settlement periods. OKCoin's only had, I think, 5% a while back. Yeah, down here, mid-November. But if we just look at LTC, like I was saying before, to take note of what outstanding margin calls are on the book if you decide to trade those contracts. So you might want to figure into your trade decision and what contract to pick. The delivery, the front week had a 23% write down on that contract. That's pretty hefty. So LTC's definitely been taking a lot of haircuts currently. So that concludes my video on the futures event and the socialized margin call system. I think it's very important as traders that we know these systems well. There's a lot of nuances that can go into making our trading decisions on both ends. Again, I think the futures markets will continue to grow and continue to have more importance, and even on the spot importance and effect on the spot trading. So be aware of those times of settlement that happen on the exchanges. And then again, with the margin call system, watch your contracts and see what kind of socialized losses you have there, and be aware of how that margin call system works, that it's not just a market order. So this is BTC VIX. Again, you can find us all at WhaleClub, and I'll have all of the links on the show notes. Bye.